Good afternoon. I'm glad you can make it. We're going to have a pretty small crowd today, but that's normal. The videos get watched, and that's what's important in their archives. What I want to talk about today is different kinds of risks and so on, and I'm going to get into that. This is from the PDF file, and I'm going to, of course, I better go down and do what I always have to do, just make the statement about risks so nobody sues me. And I'm just going to read this part here. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now I'm going to go back up here, and I think I want to start on this one right here. I'm not going to spend a bunch of time reading these. I just want to do this very briefly so you know what I'm going to do today. By the way, I'm going to do this webinar. I'm going to do one next week and then one the following week, and then I think I'm going to end this series. It's been going since May, so that's long enough. But I will continue to do other webinars every few weeks and so on, but as far as this structured one, I'm going to probably do this one and two more, and then I'm going to be gone for a week, so I couldn't do it that week anyway. Anyway, I want to talk about things, and I learned a lot of this stuff from a guy named Frank Bunn. You've heard me talk about him. I like a lot of his concepts. I see Jack's online. He took some classes from him, but I got this information through his Udemy classes, and I've been through the information several times, and it just makes sense to me. And I've designed a lot of my, not so much my scans, but some of the charts and so on around his concepts. So, just a second, I've got to mute somebody. Okay, anyway, I want to talk about structure today as we look at charts. That just refers to the high and low prices of each interval, whether it be a weekly interval, monthly, daily, 5 minute, doesn't matter. And then what type of candle is it? Bullish, bearish? What's the message behind the candle? Direction is the relationship of the closing price to the opening price. And then structurally higher highs and higher lows, as well as the closes, refer to the structure of a chart. So in a bullish chart, the structure will be higher highs and higher lows, and in a bearish chart, it'll be lower highs and lower lows. That's what I'm going to be talking about when I talk about structure. It's important to understand that structure can have higher highs and higher lows, even if the direction of an individual bar closes down. If it gaps open and closes at its low, but it still makes the higher high, that counts as a higher high when we're looking for changes in trend. Okay, the next chart I'm going to be talking and looking for pivots, and I'll talk about confirmed pivots or just a confirmed pivot has to have a higher high on the prior bar, and then a lower low on the pivot, and then a higher low on the next bar. It's easier to show than to talk about. So that's a confirmed pivot. Reverse for shorts. A pivot trend change occurs when a confirmed uptrend triggers after a series of lower highs and lower lows. And just reverse it for downtrends. And then I'm going to look for this. The third consecutive or non-consecutive higher high changes the price action trend from down to up, and I'll be looking for that. Or we'll look at charts where that has occurred. It's just a reverse for downtrends. Price action changes do not have pivots, which makes it what's called an unconfirmed price action trend. But if you get 3 bars in a row where there are higher highs, or not necessarily in a row even, If you get that third higher high, he considered that a trend change, and I think that's a pretty valid way to look at it. So trend changes may begin with either a pivot trend change or a price action trend change. In price action uptrends, there will never be more than 2 lower lows in the reaction. So if you have a nice trend and if there's a couple of lower lows, it does not count as a price action trend change to the downside. So we'll be looking at that. With reactions limited to 2 bars or less, we assume the trend will remain in place. With each chart, first look at the highs and lows of the structure and then direction. Look for pivots or price trend changes for low risk entries. This is the goal right here. We're looking for low risk entries rather than chasing stocks. Okay, where am I here? And then the last thing I'm going to look at, and I'm going to talk about this as we go along, are the 3 types of risk: setup risk, intrinsic risk, and contextual risk. There's confusion about this, but I'll try to explain what the difference is as I go through these charts. Okay? That's all that, hang on a second. That was a friend of mine calling. I had to hang up on him. I forgot to turn my my phone off. I'll call him back later. Anyway, so let's get started. Before I get started, though, let's do this. I know it's a kind of a weak market today, and I want to just go in here and do this quickly. I'm going to rebuild the indexes in the group. I've got this on a 15-minute update on the Thinkorswim. So let's just take a quick look at the market, and then I'm going to get into the chart reading. Now this over here is just a spreadsheet that I've put together to help determine when these conditions are met with these things that I just talked about. So you can see that I just made a column and then I copied it and pasted it across the spreadsheet. And these are the things I'm going to be looking for when I'm doing chart analysis. And the reason for that is to make sure that I look at everything I should be looking at before I determine if the chart qualifies for a potential buy. Okay, let's just take a quick look at this when it finishes. Must be updating right now. Yeah, it is. Okay, that's why I get that hourglass. Should have turned it off, I guess. Come on. Uh-oh, nope, not yet. When I'm recording it, it really just slows this down quite a bit. Okay, so let's take a look at this. I'm going to open this up. I'm going to sort on raw combo, and let's see where we are today. I see the energy index is up. Consumer staples, so these are sectors. Consumer staples, communications, industrials, and financials, and the rest are down. And as we all know by now, the SOX is the weakest group today, and the tech index or tech sector is also very weak, down 2.4 and 3.4% respectively on those 2 indexes. And it's not a surprise that we're getting a little pullback here. Does it mean the rally is over? Not necessarily. We'll just have to see what happens. But that's just a quick snapshot of the market. Now, I could go top down from here and do some prospecting, look for stocks that way, but I'm going to go into my user smart groups and let them do the work for me. I've got a lot of scans. I've shown you a lot of techniques over the several weeks of how you can scan and look for products or potential trades. And now for the rest of these webinars, I'm going to be primarily concentrating on looking at charts and looking for really relatively safe entry points, and all of the other things that I've discussed over several weeks. So let me go in here. The indexes just got updated when I did that. Now I'm going to go in and let's just rebuild the user smart groups quickly. Okay, almost done. Now, the charts that I've got up, looks like I've got the QQQ up, so we'll take a quick look at it before I jump to the groups or the stocks. Okay, let's get this out of the way. Okay, now the way I've got my screen set up here, well, the Q's got to come back up. When it updates, it defaults to the whatever's at the top of the list. Let me bring the Q's back up. Okay, so here's what the QQQ looks like today. You can see there was a gap down and a pretty long candle. Volume is up. And by the way, this is another chart that I put in, and it's in there. I just put one in called 2C. I was using 2 under my daily analysis charts for my primary chart, but I wanted to be able to look at the 3-6 histogram a little closer, so I put one in here. It's called 2C, and the reason I did that is I can move this window up like this, and I can see if an index is gaining or losing momentum when comparing the difference between the 3 and the 6. So it's just the same chart. I just moved this window up above the volume. Okay, so looking at the weekly chart, and that's where you should always look first. Remember the rule, we really need to see, we can allow for 2 lower lows if you're a long-term investor. 2 lower lows, and when the third lower low hits, it would be a price trend change on the weekly chart. This is what the week looks like so far, as we're we're nearing the end of the week. So I'm not going to even think that this market is going to roll over yet, but we're going to have a short-term correction, it looks like. This looks a little more ominous on the daily chart, no question about it. Volume is up, volume point of control turned negative, so you have to be careful. The primary next support on this would be the 18, the 3 and the 6, and this is why I did this. You can see that it's still positive even intraday today because it's had such a huge run up. This means the 3 and the 6 were spread wide, pretty wide for this histogram to keep going up like this. And then it started rolling over yesterday, and it's sitting down here now, and I don't think it's going to cross to the downside, but I wanted this flexibility on this window, and that's why I put this chart in. There's a white version of it also. Okay, let's get away from the market and let's just go into stocks. Now, I updated those smart groups. I'm going to go into the watch lists, and I'm going to go into number B. No, I'm sorry. I'm getting confused here myself. Here's what I'm looking for, C. Stocks up intraday, $15 and up. And you can see I didn't go into the industry groups. I should have done that. But I don't really have to do that because on these scans, I know where the strength is. Large pharma is one of the groups, and when I looked at the industries a little while ago, large pharma was at the top of the list. So you can see how well this works just by rebuilding these smart groups intraday. It takes the top 100 stocks that are in demand, that are $15 and up, and it puts them into this view, and then the raw combo is sorting it on the industry price change. Now, if I look over here, I can tell immediately that these, let me mute somebody here. That I can tell immediately that these stocks have been weak, because look at the relative strength on ABBV, 25 for the relative strength, HDSI, and 8 on the Kirkpatrick, but it's up 3.56% today. There's no VPA signal, but let's look at this stock anyway, because it's at the top of the list. And this is where we can start talking about what the structure is and the context. The structure here is we're looking for 3 higher highs if I use that criteria that Bunn uses. And you can see that this would be the first higher high, even though it closed in the middle here. That's higher than this. Let me make this a, and let me bring up, I'm going to bring up an arrow here so I can point this out. So this would be the first higher high because it's higher than this one. This high is not higher than this one, and this would only be the second higher high when it surpasses this level here. So using that criteria, this stock is still in a downtrend on the weekly chart. Now, going over here, you can see using those same rules. Let's assume this was the bottom right here. Going over from here, here's the first higher high when this was surpassed, and then when this one was surpassed, that was the second higher high, and then a couple weeks later, it took until it got to this candle right here for the trend to change from down to up. And then you can see what happened with this. It continued up there, all the way up, and there were, okay, here's a lower low than this, and this is a lower low than this one right here, but that's only 2 of them. The requirement is 3 lower lows. So this was a price action trend change here up, and then this would be a price action trend change down, because this low here obviously is lower than this one, and then here's another low, and then another low. So the trend was down, it remains choppy, and so on, and then you'd have a price trend change up right through here, and then down, and this could be considered a price trend change up. I'm getting tongue-tied. But because we only had this one down week, and then of course you have this fall off here, which changes it to a price trend change down. So that's what I look for on price trend changes on the weeklies. Come on. Oh, I need to get back up here. I always do that. On the daily, you can use the price trend changes also on the weekly. The daily, I like to use the weekly because if a trend gets in place on the weekly, as I pointed out, it can be a much stronger trend, and then you use the weeklies for the general trend and then use the dailies to look for entry points. So let's look at this. Now I was talking about price trend changes. Now we're going to look at context. What is context? And let's talk about the 2 types of risk at the same time. So the context is where this stock is relative to the moving averages. So until today, with this big gap up here and the nice move up. It was just sitting in this area right here. And if I draw a support line across here, the context was that the stock was down, so the contextual risk was down, or what you're looking for is maybe a rally up here and then for it to pull back. But looking at this support area right here, where you can see there's been accumulation because it didn't fall any further, and there's been some VPA flags, this means that the intrinsic risk was not that bad. And also with this flat period here with the moving average, the contextual risk was relatively low also. When it's settling down like this, the risk is not that high, which means that if you want to take a trade down here, even though the fan is down, you can use your setup risk. You know how much you're going to risk, and you know how much you can lose, but the support is in here because this is building up a base before it takes off. I don't know if that makes sense, but as we go through these, it'll make more sense. So what I'm looking for is, I'm going to clear this out. Is I'm looking for some stability, especially when these stocks are in a long-term downtrend, because the intrinsic risk becomes less when there is a buildup over several days or several weeks. Now any questions about that? I hope it makes sense. We're going to do a lot more. Let's look for a stock which, let me go back here. I want to go to all securities again. We're back to the large pharma. I'm going to open this up. I want to look for a stock which is potentially crossing over or was negative just for a short time, and it has a decent relative strength. Clean Harbors. It didn't have much volume or anything yesterday, but it only crossed down a couple of days ago, and the VPOC went negative 1 day ago, but the relative strength is 88. Let's bring it up and take a look at it. I'll bring it up and then I'll minimize this. Okay, this was probably a good example. Okay, so just by looking at the warehouse view, what I saw there, and I'll scroll up and see if I can find this, is I saw a 2-day pullback on the 3 and the 6, a 1-day pullback on the VPOC. If I look over here at the weekly chart, I can tell immediately that this has been a strong stock for quite some time. It's outperforming the S&P. This yellow line is going up, and the stock is going up, so it's outperforming the broader market. A lot of information just in that one chart. And then we have, of course, the VPA indicators right here, which tell us what the trend is doing, with the best fit up, 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 and also with the random walk trends, which I really don't use that much, but the information is coded into the program. And then let's go over here to the right. Now it updated again, the 15-minute update. What do we have? What do we see here? We have, contextually, we have a stock that's in a strong uptrend because, let me get my arrow out again. The fan is up. Relative strength is 88 and 88, depending on which relative strength measure you're using. The group has been going up and then flattened out, and it's turned back up. The 3 is above the 6 today. Just turned up. It was down. We have a low volume test and a confirmation of that test. What's the contextual and the intrinsic risk here? It's very low. Let me make this, well, I can't make it unless I get rid of these and go back to this and then open this up. I'll put a crosshair on here to use this. You can see that it came down, it tested the 18 on this low volume test and a confirmation of that test, and it's been going sideways all week with lower wicks on here, so every time it traded down, there were buyers that came into it. You can see the context of this is up. The intrinsic risk, because of the support across here, is low, and I would say that the contextual risk is low too, because it's going up, and you can see the 3 and the 6 have really tightened up here. This is why I wanted to use this chart so I can see that, and it's a pretty low risk trade. Now it's moving up today, and if it can break past this area up here, it could really go. Now what we also have here is a pivot. You can see this lower wick here came down to the 18, and this stock, or I'm sorry, this candle, I can't zoom out anymore. This candle has a higher high than this candle, and this pivot has a lower low than this one. So with this move today on this, or with this candle, this bullish candle, it would have taken out the high from the prior day. So that means that this is a confirmed pivot. It's still got resistance to get through over here, but using that thought process, this would be a confirmed pivot. Now, so I've talked about two types of risk on this chart. Let's talk about the other, and I'm just going to go down here to position sizing risk. I have different position sizing charts here. If you think you're going to get a long run, you can go down to this for long trades, and this will give you your R levels you have to reach before you reach a certain profit, but I'm going to use this instead. So what would our risk be on the setup risk? If you use this, I don't want yellow. Let's use black. It shows up pretty well. If you use this pivot as a low, and this would have been the confirmed level right here, when it takes out that high, the risk was about 2.6% is all. So this is your setup risk. If you had a buy stop in here and got filled on this particular stock, you know your maximum risk, if it reversed the same day and didn't gap down, would be 2.59%. So this is what we're looking for, though. We're looking for low risk entries. Rather than chasing these, and yeah, you can jump on them. Sometimes they'll follow through, sometimes they won't. But it's better in a long-term trend like this. And you can see by long-term, I mean that there is, these are higher pivots all the way at, well, this is a higher pivot here. This one's a little bit lower, but same area. So it was trending up, and now there's an opportunity to get into this stock and hopefully catch it on another one of these rides. Now here was a place to enter right here. This was an entry here. It didn't probably would have been stopped out on that one, but this is what I'm looking for with these stocks. Okay, I'm going to get rid of this. Now let me take you down to that other long trade and do this again and show you what I mean, so I don't confuse you. Everything is scrunched here, but if I were to buy that right there, there's a 2.58% risk. And then if this stock really gets on a roll, here's your risk, which is 1R. and here's your reward if it starts moving up. So if it gets up to 176.14, your reward would be a 2 compared to your risk of 1. Pretty handy tool. And I realize that this is pretty scrunched, but it's in there just so you can get a feel for what you can do if you get on a stock that's really on a roll. Okay, let's go back. So this was a good example showing the different types of risks. Now, what do I use this for over here? Let me close this up and get it out of the way. This is something I looked at the other day. It didn't get executed. I do have a buy stop in on it still. Norwegian Cruise. Let's just take a look at this. And I'll show you NCLH. Wrong symbol. What am I doing? NCL. Oh, I see. I made 2 typos in a row. Okay, so I did this on this day right here. I put the date in, the 18th, and I'll just make this larger here so we can see it. The trend, the weekly trend is up. The price trend change was down here. It's been moving up. It's been outperforming the S&P, but then the group has pulled back, and it's kind of flat this week compared to the S&P. Here's the group up here, group rank of 98. The cruise lines have been hot. Here was the expansion, and then some contraction, and then a pullback. You can see where the momentum was being lost on the 3 and the 6 as the moving averages come together, and then it went negative. And now you can see the moving averages were coming back together. The spike's a little bit longer today, but when I was looking at it, it was coming back together as the moving averages converged. Now, this tried to go today, but it didn't go. But I primarily want to show you what I was looking at on the 18th. You can see down the corner, this is the 18th. So the fan was up. And what these on this spreadsheet, these are all, none of them are bold. So what I decided to do to make it quick and easy, rather than typing in yes, no, whatever, I just selected what it was or what it is, and then I just do a Control B on the keyboard. So at that time, the 3 and the 6s were down, and they're still down. So Control B will bold these. So that was down. The RS rank on that day was 95.97. It's still 95.97. You can see that. VPA flag on that day was an effort to rise. VPOC at that time was no, and it's still no. Volume pocket pivot, there's no blue line here like this, so that is a no also. Contextual risk is low. Why is it low? Because the stock is in an uptrend, the context is up, and I am seeing both intrinsic risk as being low because it's under accumulation right here, and also the contextual risk because of the direction and also the support on the moving average lines. Okay, low pivot, unconfirmed, high pivot. Okay, there's no confirmed low pivot here. I'm using this right here. Let me point this out. I'll bring my drawing tools back up for a second. Okay, so the way I was looking at this high, this could be considered a pivot because it's slightly lower than this. So for this pivot to be a confirmed low pivot, it has to take the high of this candle out. And it has not done that yet. So I could still, and I probably would, while this is where I put my buy stop above this, it's still in Thinkorswim, and if this happens to take off over the next few days, I'll get filled on it automatically. But I'm requiring it to take this area out. Okay, let me clear this. Get rid of this. So going down the list, the price action trend change didn't happen today, but it's up. I'm using this for the weekly charts. The daily trend is neutral. You can see that. And the weekly trend is up. So it's just kind of a little worksheet to make me really look at a stock rather than just saying I don't want that stock or I want to trade this stock. I just want to line these up. Now I did another stock here. Do you want to go through it too? I haven't traded it, but we can take a look at it. And then these are all blank here. So you just put your symbol in and you put your date in, and then you go down and you can put whatever your selection is. You just do a Control B. And I can share that with you if you want it. It's to make things easier for me. Does it make sense? Is my question to you. I haven't even looked at my chat. I may have some questions here. Okay. I'm sorry I didn't look at these until now. There's 2 new messages. Yeah, I'll share it. I'll get it out to you. So let's just go through this ITGR, if you don't mind, and then we're going to look for some more stuff. Now look at this one here. This was done on the 19th, which was yesterday. Whoops, what did I do? I went over one. This was on the 19th, and this is a good example because this I should have put my buy stop in on this one, right? But this shows that this is in a long-term uptrend. There were not 3 lower lows to turn it to a downtrend. So the trend is still up. Here's a lower low. Here's a lower low on these 2 weekly charts. But this weekly chart is up now. So the trend remains up. And if you use these best fit trends over here, they're up. All of them are up. So I'm saying the trend's up, and I think you'll agree with me. But this is a sharp pullback on this stock, and let's talk about context right now. What is the context? The context is the fan is still up. It found support at the 50-day moving average, a little bit below it. Using context also, I'm using VPA flags in my contextual analysis. So there is a low volume test here, and this is the pivot also. You can see this is the lowest pivot. So I'm going to do this on one, and I said I did it on this day right here, the 19th. So I have a low volume pivot, and it would have to take this, the high of this one out for it to be executed, and that happened actually yesterday, and the stop would not have been hit. Let's just do this with and then I'll come back to this chart. I just want to make this a little bit clearer here. Okay, I'm going to go to my R tool. Here's my low pivot. This in an ideal pivot, this candle here, we're updating again, this candle here should have a higher high than this. So I'm going to let this finish updating. I should have just turned it off, but I wanted current information. Okay, so rather than this high, I thought I would use this high instead. Let me delete that. So this low right here, I'll get there yet. This high right here, because it's a higher high. And a lot of times this stuff's subjective. So, use your own best judgment. So it would have had to take this high out, and that would have happened yesterday. But the stop is down here at 82.29 or a couple of cents below that. So if it were purchased that day and with a little pullback, well, this happened early in the day, so that wouldn't have mattered. And then today it followed through. So this would have been an excellent trade because it was executed today. Getting back to that same chart, let's go back to it, and I'm going to walk through these with you. Okay, so this was on the 19th. The EMA fan was up. The 3 and the 6 were neutral at that point. You can see, let's see, 19, is this a 20th? Well, it was actually up just a little bit. I put it, that's pretty neutral though, isn't it? You'll give me that. But you can see this histogram, we're looking for change in momentum, and it's hard to look at the moving averages and determine if the momentum is changing. But with this histogram and this window being able to open it up like that, it's really easy, much easier to see. You can see it here, but I just wanted to be able to enlarge it. Anyway, here's the low volume test, and then the execution would have been on this day right here. But 3 and 6 were neutral. Relative strength 73 and 65. What are they today? Still the same. VPA flag, low volume test. Now, as far as the VPA flag, you can specify this as that day or the most recent VPA flag. VPOC was positive on the 19th. If you look down here at the bottom of the chart, volume pocket pivots, no. Contextual risk was low because of it's residing on the 50-day moving average, and the VPA flag is giving a signal here. Intrinsic risk was low because of support across here. And let's put a crosshair back on here. If you look back here, there's some support through here too, and this would be part of the intrinsic risk, but primarily the most recent. So that was low. A low pivot, I put confirmed on there because it took that out. Price action trend, that says change. It shouldn't say change, but, well, no, it's fine. I use that on the weekly chart only. The daily trend was neutral at this point, and the weekly trend was up. So that is my scorecard. And the primary reason that I did this is it forces me to look at a stock closely, and then I can determine if I want to take the trade or not. And this is obviously a trade I should have taken, but I didn't. Sometimes I do all this work and then I don't follow through. Anybody else ever do that? Okay, so that's what I do with this. Now let's use the rest of this time to look at a few other charts that are happening today. Now I'm going to go down here This is in C. I was looking at the $15 and up. Let's just go down to these instant watch lists, 25 stocks. Now, under my instant watch list, I put something in here which is not an instant watch list, cut off at 25. I don't know if I told you this or not. These are CanSlim type stocks intraday with the fan up, and it doesn't have to be limited to 25 stocks. These are stocks that have at least 20% growth in revenue and earnings compared to the same quarters last year. 250,000 shares, $10 stocks and above. The fan has to be up, and there has to be a positive one-day change. The reason I put this in here is I wanted to be assured that these stocks had decent earnings, and if they meet all the other criteria, like a fan uptrend, that's another thing that's in my favor. Now, this is the end of day over here. I've combined the warehouse view for end of day and intraday. So this is the column that I'm looking at intraday. And let's just take a look at some of these stocks. Let's take a look at Interactive Broker. It's having a good day today. Yesterday it crossed down both on the 3-6 and the volume point of control. There was some news that came out about it. And I think their numbers were down or something, but they pay over 4.5% on money that you have sitting there in your account. None of the other brokerage firms do that, but I've tried Interactive Brokers and I really didn't like it. And besides, everything works with Thinkorswim, so I'm not going to put any money into it. But it would be nice to get that extra income, wouldn't it? So let's look at Interactive Brokers. You can see that it's in the price trend change 1, 2, and then this is a red candle, but this high is higher than this high. So that means that on the weekly chart, this was a price trend change to the upside. And it's still up. This low here is not lower than this one, so it's got one lower low. The trend is still up. The relative strength is poor compared to the S&P 500, but it's had a nice run, and it pulled back here, and it is showing a bullish candle today after a bearish candle yesterday. So let's put this stock in this chart. That's probably going to take up most of the rest of the session, but you'll get the idea. So the stock is, I'll just put IB in here. I'll make that a cap. And the symbol is ITGR. And the date, as I'm doing it today, 7/20/23. The fan, I look over here, the fan is up, so I put that on there and do a Control B. I know it's up. The 3 and the 6 are negative. You can see that. So they're down. The RS rank, I look over here, 83 and 34 only on the Kirkpatrick. Two different types of measurement for relative strength. VPA flag today, I'm going to use the flag today, low volume test. VPOC is negative still because of this sell-off. Control B. Volume pocket pivot, no. Control B. Contextual risk is, I'm going to say neutral at this point because it really hasn't built a base. I don't think it's high because of this strong candle today and the VPA flag. So I'm just going to put that in as neutral. And the intrinsic risk, looking back here, you can see there's a lot of support here going across here from this area. So the chances, think about intrinsic risk, the chances of being stopped out on a trade. IBKR, okay. What happened to my caps lock? I don't know how that happened. Okay, so the chances of getting stopped out on trade, think of that as your intrinsic risk. I think with this candle, the chances of getting stopped out on this because the fan is going up, I think it's actually pretty low. So I'm going to put low in here. It could be low or neutral, either one. Low pivot, you could consider this a pivot. It gapped down here. So it's going to have to take out the high from this. Why don't I make this bigger? Well, I have to fill that in. That's why. Anyway, it's going to have to take this high out for this to be considered a low pivot or a confirmed low pivot. So unconfirmed, Control B. High pivot is for the short side. Price action trend change or trend is up. It changed to up back here. I explained that. The daily trend is neutral. And the weekly trend is up. So if you weren't talking to yourself like I am, you could fill this out in less than a minute. And then you have a record of what your trades. So you can just keep building across here, and then you'll have the date. Let me move this back over here. You'll have the names, the date, and all the information, and then you can go back in time and see if your analysis was correct or not. Okay, does that make sense? Let's do another one. Okay, anybody see a stock on here you want to look at? United had a big day today because earnings were good. Let's look at United. Yeah, this is another nice setup. And this is one I considered this morning, and I just didn't feel like trading today. So I didn't. But I really considered this one. And we're going to look at this one in Thinkorswim also after I go through this process. But going through this quickly, EMA fan up. The 3 and 6, well, as I'm analyzing it today, they're positive, but yesterday it was negative. So I'm assuming that I'm doing this before today's action, okay? So the 3 and the 6 yesterday were negative. RS rank. I'm going to use today's RS rank. Well, this is last night's RS rank anyway. 89 and 85. 89, 85. VPA flag. Confirmation of low volume tests yesterday. This is why I considered it plus the low intrinsic risk. Confirmed test. VPOC was yes. Control B. Volume pocket pivot. Yes. See the blue lines here? Control B. Contextual risk was low because of this accumulation in the VPA flags, and the context of the chart is that the chart is going up. The fan is up. So it has low contextual risk. Intrinsic risk, it's pretty low in here too because of several days of accumulation. Let's put the crosshair on. If you go back here, you can see this was a resistance area, and it's really now a support area. So on the intrinsic risk, I'm going to say that that is low also. A low pivot, it was unconfirmed yesterday, but today was confirmed because it took out this high here. More than likely, this is the low pivot it looks like here, or right in here. Let's make this large and see. Now, this isn't a true low pivot because this low is here a little lower than this, but all the other factors in there, let's see. Intrinsic risk. Where was I? Low pivot. I'm going to say unconfirmed on that. Price action trend up because of the weekly chart. Daily trend. Daily trend yesterday, pretty neutral, I would say. Weekly trend up. So you can see it really doesn't take too long to do your analysis, and then you go in here, and the final stage is setting up. I'm just going to go up here and use this daily chart here. Like I said, this is subjective part of the time because everything isn't necessarily as well defined as it should be. But if you use this, I did this yesterday. So if I'm using this as the low right here, and the requirement would be for this to be taken out, it would have been taken out today, and United, it opened pretty weak, I think, and then it turned around and went up. So the buy point would be somewhere in here for a 4.31% risk. That's not a huge risk, and you do your position sizing, you know exactly how much you're going to lose if you get stopped out, but you can see why this was a pretty good trade setup. So that's 2 in a row I should have taken, right? And I didn't do the analysis on United. I did look at it though, and it was a nice setup. And where did it come up? It came up here in this can slim. But there are these other bullish lower risk setups that I've got in here for end of day and intraday. Since I've done the intraday, let's look at the 3 crossing the 6 after a pullback today, and you can see that all of these are up, and these are all crossovers here. I don't need to analyze them. I want to take a look here at United. Here's J&J, big day today. UAL. Well, it's really pulled back now. But you can see how it traded today. Here's pre-market. It opened here, traded all the way down, and then it came back down, and then it started going up. It was all over the place. It looked really good here, but you can see that these are 16-minute bars, by the way. You can see that it sold off here, and doesn't look great, but it would be still well above the buy point of right in here. Let's go back to the buy point was right in here. So if I update this with my F5 key, let's look at it. It'd still be a long trade. Well, it looks like it's running into some resistance here, and also how bad is the market now? And wow, the NQ futures are down 2.3%. So there's a lot of market pressure right now, and this just generated a transfer of ownership bar. You can see that if I bring this up. Generated during the day because they're selling into it, and that's what happens when this is generated. It means they're selling into it. And there's the closing bell. Anyway, that's what I'm working on. And I think it's going to be very helpful. I hope you saw in that my thought process, and if things don't match up what I'm looking for, let me rephrase this. I am forced to look at all of the factors. First, I have to look at the weekly trend, and then I have to look at the daily trend. I have to look at pivots. I have to look at context. I have to look at intrinsic risk, and so on. And if everything lines up, then the lower the risk is if the trade is executed. Thank you. Okay, I got through it, and we're going to be doing this for the next couple of weeks. And what we're going to be doing also is I promised I would look at debit spreads. So next week I'm going to take part of the session and talk about looking for stocks and potential trades with debit spreads, both long and short. And of course they may not work out, but we'll go through this same process and look for those stocks and hope we can get on the right side of a trade. Thanks, guys, everybody. Yeah, I like the process because it makes me more disciplined. All right. Well, thank you. I'm going to shut it down. Everybody have a good weekend. I don't really have anything else to add. Any questions or anything? Okay, good. Well, thanks for listening. Thanks for attending, and I will get this out. It'll be out tomorrow morning at the latest. Thank you, George.